gold since the start of the year, up just about 10%.
Inflation has moved down from its peak, a welcome development. It remains too high. We are prepared to raise rates further.
Theoretically, conceptually, it makes sense.
Gold has long been considered a safe haven, a timeless hedge against economic uncertainties. However, as we step into 2024, the glitter of gold as an investment option is losing its shine. This shift in perspective stems from the realization that gold may no longer be the unbeatable champion it once was when it comes to combating inflation. Let's delve into the reasons why buying gold might not be a stellar investment choice in the current economic climate. Many people have believed that gold is a great way to protect your money when prices are going up, which is called inflation. They thought that even if regular money loses its value, gold stays valuable. But when we look at recent trends, this idea doesn't seem as true as we once thought. In the last 10 years, some big countries, like the United States, have seen changes in how fast prices are going up, which is inflation. Gold is supposed to go up in value when inflation happens. However, the actual data doesn't always match our expectations. While there are times when gold prices went up when inflation did, there are also times, like from 2017 to 2019, when gold didn't do so well even though inflation was rising. This up and down performance challenges the idea that gold is always a safe bet against inflation. If you rely only on gold to protect your money from losing value, you might be disappointed when you look at the real evidence. It shows that things other than inflation rates also influence how well gold does. The world's economic situation has become more complicated. Things like political events, trade issues, and decisions by governments can affect how the market behaves. When people are unsure about what's going to happen, they might choose to invest in gold, making its price go up. But in times when things are more stable, gold might not be as strong. To sum it up, the numbers about inflation and gold prices tell us that the relationship between them is more complicated than we thought. Gold doesn't always go up when inflation does, challenging the idea that it's a surefire way to protect against money losing its value. As more options become available and the world changes, investors are thinking twice about whether gold is still the go-to choice for keeping their money safe from inflation. While gold may act as a store of value, it fails to generate any real returns. In comparison, other investment vehicles, such as stocks or real estate, have the potential for growth and income generation. Investors are beginning to weigh the opportunity cost of holding on to gold, considering the foregone returns from alternative, more dynamic assets. Maybe 10% of your wealth can be invested in gold, but it cannot be the ultimate investment plan. Gold is often considered an unproductive asset because it doesn't generate any income. It just sits somewhere. On the other hand, a productive asset is something that can grow in value and potentially give you returns over time. This could be things like stocks in companies, real estate, or even investments in technologies that are changing the way we live and work. So when you compare gold to productive assets, like investing in a growing company or real estate, the difference becomes clear. Productive assets have the potential to not only protect against inflation, but also to grow your wealth over time. They can generate income or increase in value, offering more dynamic possibilities compared to gold. In 2010, one investor chooses gold for its reputation as a stable asset and hedge against economic uncertainties. Over the following decade, the value of gold remains relatively steady, preserving the investor's initial capital. Meanwhile, a second investor in 2010 opts for a diversified stock portfolio spanning various industries. Despite economic fluctuations, the stock market sees substantial growth during the same period. The diversified portfolio benefits from the overall upward trend in equities, resulting in significant appreciation of the investor's wealth. Therefore, modern world is evolving at an unprecedented pace, with technology driving economic advancements. Unlike other investments, gold lacks the dynamic utility that comes with technological progress. Industries such as renewable energy, artificial intelligence, and biotechnology are shaping the future, and gold simply cannot keep up with the innovation-driven potential of these sectors. The rise of cryptocurrencies, particularly Bitcoin, has introduced a formidable contender to gold's status as a store of value. Bitcoin, often referred to as digital gold, shares some characteristics with the precious metal but offers additional advantages. Cryptocurrencies are easily transferable, divisible, and exist in a finite supply, making them an attractive alternative for investors seeking a modern hedge against inflation. Historically, central banks have held significant gold reserves as a safeguard against economic downturns. However, recent shifts in central bank policies have seen a diversification away from gold. As central banks explore digital currencies and alternative assets, the traditional reliance on gold as a bulwark against economic volatility is diminishing. The interconnected nature of the global economy means that events in one part of the world can have cascading effects on various markets. In an era of global economic interdependence, geopolitical events, trade tensions, and other macroeconomic factors play a pivotal role. Gold's inability to provide insulation from such external shocks makes it a less attractive investment in the eyes of many discerning investors. In the investment landscape of 2024, gold's reputation as an infallible hedge against inflation is waning. The traditional allure of gold is being challenged by the emergence of alternative assets, technological shifts, and changing global economic dynamics. As investors reassess their portfolios in light of these factors, the once gleaming appeal of gold is losing its luster, giving way to more dynamic and forward-looking investment opportunities. While gold may always have a place in the annals of history, its role as a premier investment choice in the face of inflationary pressures is no longer a given. Also, the prediction of recession in 2024 investing may be a risky game. If you want to learn more about recession, you can watch these videos.